Okay, so getting into the new week. Look, jump straight into it. Just get straight into Aussie, just because we've just had the retail sort of data out for the month here, and there was actually a big miss to the top side. Previously it was 0.2%, which got revised to 0.3%, expecting 0.3% again. Things have sort of maintained pretty flat, but it actually came in 0.9%. So that's a big miss to the top side. And if the market was pricing it, I mean, retail sales is one of those things. It's not like I call it kind of really realistically, probably like a third tier bit of news because, like, yes, it does help shape the market, but it's not sort of it's just a smaller piece of the puzzle to the overall picture about what the central banks are going to be doing. So certainly, look, a miss to the top side when when you take that and add it in with the other sort of factors of going in, like obviously CPI sort of going through the roof, you would think on paper this is starting to get to a point that the RBA can't ignore. Um, we've had 2 months of inflation increases. If you look at the property market and that, the houses are going just bonkers. They're like at, record highs again. And now you've got the retail, so it's sort of like people sort of just going out to the shops and buying stuff, and that's also going up. So, like, I mean, how long can they go? Oh, well, if we hold rates again, is the problem going to fix itself? Well, I mean, by general sort of logic, no. Like, why is it just all of a sudden going to right itself when you do nothing for it? So, despite sort of Bullock sort of coming out and sort of saying that, we're happy with the rates, we're happy with inflation where it is, and it's what we expected. I think that's more just sort of trying to sort of not rattle the market because it's such a hot topic issue with the general public and that because so many people took so many loans based on what Lowe said that they weren't even going to raise rates till 24, which was just probably the worst call you could have made. But so many people have got massive loans. They're all on the edge, apparently. You know what I mean? They're all crying at the idea of sort of raising rates, and that's really stifled any sort of rate rises from the RBA. And Aussie dollar has just been punished, accordingly. Like that's the thing. I mean, not only sort of obviously, you've got the sort of the risk factors of all the other stuff going on in the world at the moment. And also, of course, the big one, the fact that the US dollar has been running like crazy for the last sort of 3 months. But, you compare some of those losses by having a central bank that's actually also trying to do a little bit of a fight against it. But, it's been a perfect storm of risk off environment with the war. That hasn't actually been as dramatic as you kind of would have thought, but US dollar running and then RBA doing nothing. So it's just been a perfect storm for Aussie to get hammered. And if we zoom out, that is exactly what's happened. I mean, it's slowed down a little bit. I mean, look at this drop as it was coming down at first, and this is up until August. So from August, it's just been a slow car crash kind of thing coming to the downside here. And as you're saying, sort of like I'm trying to trade this wedge, and it's actually been providing pretty good sort of inter-session trades and direction with it all, but you want the big breakout. First price target's up around the sort of 65, 64, 64.50, I think is a more realistic target to sort of get up and retest some of these highs before we get a little bit of a sort of pushback. But, this is based off the measured move of if you were trading this triangle here to sort of come out to the top side. So this kind of move here, once we get past the swing high, takes you up and gives you that first price target. And of course, the sort of pie in the sky price target would be if you take this massive wedge and put it up over here as well. But this is more just if US dollar sort of sells off, goes back below 100. The Middle East sort of sorts out all their issues and decide to make friends, and equity markets rally to test all-time highs. So, these are the kind of things that you're going to need. The RBA sort of going, hey, you know what, 50 base point rises for the next 3 meetings. These are the kind of things, that's not going to happen, of course, but they're the kind of things that you need to sort of get the Aussie dollar really thumping back up here. So this is more a sort of pie in the sky sort of thing. I mean, realistically, let's put it all over here, maybe early 24, if at all, in the short term, medium term, whatever you want to call it. But the here and now in that of it all is that we're again pressing up against this big falling resistance. We can see the reaction every single time it's hit these ones. It has been absolutely smack down, smack down, smack down. This time it's trying to find a little, like if you look at the sort of the sell-off is just unrelenting from when it made contact up here. We tried to do it here, a second effort. The second effort, bang, unrelenting as it coming down. Got above over the side here, but still, look at the strength of these sell downs here every single time. So, the fact that we've rallied here and tried to hold the 38 could be a sign that we may be ready to give it another push to the top side here. Obviously, as this sort of came up the top here, we had this bit of head and shoulders pattern sort of that played out. It tried to rally on this one here and sort of give that second effort. If we sort of drag this up here, so this one got down past the 38. Obviously, this is the move that we're looking at from here to here. So actually, no, it came down to just a couple of pips from the 38. Had the second effort, more or less came in contact with it again, and then that second one was the one where we go bang coming down, and I think that was US CPI. That one, I can't remember. It was a few weeks back now, of course. But look, at the moment, this is the move that we're looking at. It's come up here, gave it a little push on Friday, sold off, and that's sort of coming into the close of Friday's session. But obviously it's rallied a little bit here. It hasn't. If we get we go right down on the 15-minute. The reaction from the retail sales, and this is why I say it's obviously a strong bit of data, but it's not the be all end all of it all. And you can see the reaction here. I mean, it's shot up from 40. Yeah, it only garnered 8 points, and it's not seeing any follow through as of yet. We want to see this back up above. We want to see take out Friday's highs, which if we jump back onto this, we know is a bit of a sort of a resistance point where it does like to sort of swing. It's been supports previously and that. So, above that sort of wick from Friday, but realistically above 64 is the key. That's why I've got the alarm set up there, the alert. Crossing over 64, I think we could start to say, hey, look, we're actually out of this. We're taking out the highs. This will give us a third higher high in these pushes. Like this one came up here, and then obviously you can see the sell-off was quite dramatic. But above 64, I think you're going to start to get a bit of the market sort of starting to go, hold on, wait, Aussie might have some value here. And, you got a lot of people that have been short for a long time, so you got a lot of liquidity built up above this. They're going to have their stops. And, if you can get onto a squeeze and you can start hitting some of these short stops, hitting short stops is, is effectively buying. It's adding to that sort of buying pressure because they're buying back the positions. We could see that little squeeze, and certainly I think, 64.50 for the short term, but I would say, 65.50 isn't without a reasonable level. If you think, because you're going to have, there's going to be a series of stops here. There's probably going to be a series of stops here, or maybe a little bit higher above these ones here. Because these are the technical levels that sort of people will be going, look, if it breaks this one, it's come from all the way down here. I'm short up here. I want to lock in my profits. I don't want it to sort of come to this technical level where we're starting to get higher highs and we start to get, this sort of, up, down, up, down, up, down. That's what they want to sort of fight against. So as soon as you go past these levels and you start to get this little high, well, you just assume that this trend will continue for any amount of time. And obviously that's why they're going to have their stops at these sort of levels above these highs. And that's going to give you fuel to get up to, I would say at least this sort of price level over here. So this sort of 65, high 65s, I think is definitely within reason given, if we see a bit more of a sort of broader sell-off of the US dollar, of course. So all these sort of things, like you may have the stronger retail sales, you may have the higher CPI, but till, the RBA surefire doing something about it, you're still not going to see Aussie push up. You're not going to see Aussie push up while US dollar's still staying elevated, which at the moment it is. It'll dumb down any sort of potential gains, but it can start to move in the right direction, albeit at a very slow grind rate kind of thing. So there's a couple of other factors going in, like a BOJ is actually sort of starting to talk about sort of yield curve control again. And these kind of things, while they may not be obviously directly impacted with Aussie, it could trigger a broader sort of sell-off. UJ is obviously the one to look at for that there around that 150 zone where we've seen them sort of intervene a few times. If we do get these sort of broader sell-offs, like we did see like previously with the BOJ or with the PBOC, that does have a proxy effect across the market. And it's not just they sell the US dollar against those currencies, you'll see a broader sell-off across the board as well. And that, again, another little factor that could add in for Aussie going to the top side here. I mean, the other flip of the coin is if you actually break down yet again, which we're coming really into this point here, and you break down sort of below this sort of support level that which we've seen sort of tested a number of times, and the reactions, if you look at the reaction every time, it's quite strong. So the buyers are hungry at this level. If we see the buyers disappear from this level, as in, i.e. the price come down underneath this and close underneath this, then I'd expect it pretty quick, because these people, everybody that's bought here, buying on the idea, the basis that you are going to get this drive back up from the lows. If that doesn't come, well, they're going to get out of their positions, and it's going to be the reverse of this. You're going to get those stops. They're going to get hit. You're going to see more shorts pile in. You're going to get the stops from the longs get hit, which is effectively, of course, more selling, and that's going to drive it down in 62, 61, 80 odd, definitely on the cards. But I do think it has a little bit of a chance and potential to pop to the top side. I don't think, despite sort of Bullock sort of, I think her sort of just going, oh no, look, I'm not going to, I'm not going to sort of talk too broadly about what we're going to do or what the central banks do. I think that's just trying to sort of not rattle people, because people, as I said, it's a hot topic, hot button topic, and people get upset about all this sort of stuff because they know it's going to mean more pain for them with their mortgages. But that's the nature of it, whatever. But I think the top four banks, the big four, are all tipping for a rate rise. I'm tipping for a rate rise as well, so that's five of us now. But yeah, we'll have to sort of see what happens moving forward. But I would say probably at least towards the end of the month, you're going to start to see people sort of shore up these positions, because too many ducks are lining up with this, with the retail sales like drastically high, housing market going bonkers, inflation going up. I mean, I think the RBA is stupid, but surely they can't be this stupid to just think that these things are just going to fix themselves. Like, things don't just fix themselves. Anyway, that's it for the Aussie for the moment. In that short term, want to get above this sort of 63.70, which were the highs from Saturday, highs from Friday. 64, which we can see here, has been, as it was kind of marked out, it was the support for the head and shoulders. Came up here, tipped it, and this is the thing, it was coming up here. I told you every time it had 90s, it has an issue with them. It's great for a support. I mean, coming down this side over here, okay, overshot it a bit here, but these previous times here, 90s held very well, 90s held very well this way. So if we can pop past this 64 handle, I'd expect it to sort of show up on a few radars of people, and I expect probably a little bit more of a continued move throughout the week to the top side here. Of course, if we get a US dollar rally, that's going to slow it down. If you can have that, if you can get the Aussie breaking out on its short-term fundamentals, as in prospects of the rates going up, this kind of thing, and add in addition the US dollar sort of selling off, well, that's going to be a double-pronged effect for Aussie to move up and move up a little bit quicker. So Aussie obviously isn't part of DXY, but use DXY as a sort of barometer for sort of risk and broader US dollar strength. If you're getting it on two fronts, like on the home front, stronger Aussie, on the broader sense, a weak US dollar. That's two efforts of it moving forward. We can still have strong data, but if the US is also strong, ours doesn't mean anything. So we're not strong enough to do it alone, but when it does work for us, we can get twice the energy sort of coming through for it there. So yeah, we're starting to see a little push up here now. What are we on? A new 4-hour candle, and it's opened up quite strong to begin with. So yeah, I'd expect a little bit of a follow through. I think the retail sales are very high, 3 times what expectation was. And I think sort of, we're probably going to see a little bit more of a push towards 64 cents there in the short term. Flip on to gold. Gold, I mean, what can you say about gold? It's just trading beautifully. We did get the sell-off on the morning. Sell-off, a very, very sort of broad sense of the term, or light use of the term there. But you can see this. This is interesting that this previous high, wick high over here, is exactly where they provided a bit of a bounce to come in, boom, this morning. So I think a lot of people probably were sort of looking at the open of last week, which was this candle coming down here, and sort of thinking, hey, we'll probably get the same. So, and this is what I said on the weekend video. There's no, like, I mean, there is conviction with it going up, but, excuse me, we're going to have to sort of see some solid news to justify each move up through each level. So this isn't to say, okay, we're going to fall over and come down now. No, but it means that we've gone up. There's a lot of profit. People are sort of going, okay, yeah, it's running along. It's come right into this zone. I mean, this mark here, this sort of little green patch is where we sort of marked it out. Oh, sorry, I said before that this was last week's open. This was last week's open. This is where we marked it out from the week. So I said, look, it's going to come down, rally up. Did that, came down, boom, up to 2006. So it's trading very well on a technical level, technical basis. But you're going to need people to sort of, have bits of news to justify each leg up to continue, because people are going to be taking profit. You got to remember, it's run up $200 in 3 weeks, so that's a lot of profit on the table. It's hitting resistance zones. This isn't in a major resistance zone like the 80s. The 80s were the big one, and as we saw, we said sort of we get the close above 80, bang, we're going to 2006, and that's what we got. So interesting to sort of see where it goes from here. As I've always sort of said, Asia I don't give much for sort of Asia session. I don't give much for sort of volume and movement with gold. So if we get down on a lower time frame, this is the drop down here. Obviously bounce back up. As of right now, it's putting in a little bit of a lower high. These aren't anything sort of too serious at the moment, but I still think that we'll probably get a little bit of a sort of drift around this area here, 2006. I could be wrong, of course, but I don't think we're about to blast through to 2020 quite yet. I think it's certainly a couple more attempts down to sort of stop out some of these longs, these kind of things as well. And this is what I mean, sort of like, this was last week's open. Where was it? Here, bang, you got the sell down. This is what I think people were expecting the same, and you see it rally, come back up, and it just churned along sideways here. This drags in shorts, stops out the early shorts, blah, blah, blah. Like, I think there's going to be a few games around this area here. I don't think we're about to go to 2020 quite yet. Long term or medium term, yes, I do think we got more upside, but I think there's a little bit of sideways chop to sort of do just before we get there. So get this back out onto this floor. I don't know why this jumped off the line, but it was back down to where it's supposed to be. Around here for that support there. So again, these sort of things coming back down off these off this support, we can see that it held quite well going through last week. So this could again provide a little area to sort of get a bit of a bounce off. So yeah, we're going, and of course, we're very much redlining on the, but that's expected. Very much redlining on the daily RSI stosh. Cool. All right. Across to DXY. See what's happening here. So back into this little sort of range. Opened up actually a little bit stronger this morning. It's funny actually. The equity markets also seem to gap up a little bit over the weekend on the sort of Asia Open. So if we get back down here. So this is what we were saying, sort of like this is the kind of intermediate range here. Obviously we got this blowdown over here when we had that triangle that broke, and that's what sort of gave this big drop down here, but that seems to, as of now, sort of been disregarded, and it's just trading all through that, so I've deleted that. At the moment, as I said, like on the weekend one, we've got this technical lower high coming in, up in this sort of push, moving up here. We're back at the 38, gave it a little bit of a bounce, which is also the confluence of this falling resistance. So you got those two-pronged entries of people to sort of try and give it an effort, and you sort of bounce up there. It's still coming into this zone, and this is the thing. We've got this marked out here, as you can see over here. Whack another one over here. Over here, we've seen the sellers, they like to sell it from this zone. So, this is key at the moment to obviously sort of show where we're going to find some resistance, but it's a point where we can say if we get a close above here, which will also be above this sort of somewhat sort of like lower high kind of setup that we've got at the moment, a close above here means that we're going up higher, at least to, you know, possibly fill the wicks from last week. Was that on the Friday? Yeah, fill Friday's wicks. But alternatively as well, if you can't close above here, which at the moment, as it is for this open in Asia, it's yet to do so. So this could very much sort of just come up here as it's doing, reject, come back down here, and then we're looking for these wicks to fill. And, you know, we're going to put a little support in there. I'll bang this around here, and then you put a little support in here. Nothing too major, but those wicks from Friday. Put these wicks up the top over here. Bang, and they're your two breakout levels really, because we had such a big doji on Friday, which of course dojis are just market indecision. So we sort of, I think this was more the doji here. I think this is Thursday's, yeah, they're Thursday's highs, but this area through here was your doji for the Friday. And so, you know, you've got to sort of see what it wants to do. But if it takes that, I would say early sign that it's sort of going to test at least this upper level here is if it can close above this little short-term range that we got set up over here. And obviously a test of the bottom side of this range will be if we can take out the wicks from Friday morning. So as of now, so I mean, Asia opens are always a little bit quiet. You got the guys that are moving the market are generally all still sleeping. So I don't expect a great deal sort of happening sort of through Asia here. You may see a little bit of a move up, but again, sort of like with the look for the gaps, and generally you have a sort of gap direction, as you can see with these ones here. And they're intraday, sort of weekly. It was a very flat open today, so it's not really too much sort of given away. So as I see at the moment, it's obviously hit that zone, rejected back down. It's trying to come down, but it's just really pretty tight, And you're seeing these things reflected on the other crosses as well. If we have a look, actually, if we get down on the 30, which probably gives a better picture of that. So it very much sort of came up into that zone, and as quickly as it came up, bang, 30 minutes straight back down. Overbought, sorry, tipping back down. Could expect a little bit more of a drift down, but it's nothing really sort of noteworthy at the moment. Seeing a little bit of this short-term support start to shore up here. This one. Okay, and across the copper. Copper, as I said, sort of like finished the week quite strong. And yeah, it's not doing a great deal in this morning. So, I mean, this is on the 30, and copper you only rarely ever trade on the higher time frames, but as a short term, you get a little bit of this triangle sort of coming up. We got a lower high, but it's obviously grinding up back towards that level there. So I'd get out further on the copper 4 hour at least on the 4 hour time frame. And as we can see, this is the channel that we were looking to trade through. We had so flip onto the daily quickly. We had this sort of negative divergence as sort of prices coming down here, sort of holding flat, and obviously as it sort of came down with this large spike here, buying was sort of still pushing up here. So it wants to get up, or it needs to get up above this first zone here to trigger this kind of range to come into effect. A failure to do so, obviously a smack back down, but I'm not really sort of looking so much at that triangle anymore. I'm just more looking at the horizontal levels and using those to provide a little bit more of an idea. Because I think realistically, while everything is so uncertain, mainly with the Middle East and equity markets are getting smashed, every risk is just shot. I imagine a lot of things mainly to be ranging. So as it's ranging, sort of like left to right kind of thing, and it's all highs and lows, I don't think we're going to be getting major trend breakout moves. I think it's just going to pick a range, and then it's just going to hug that for a while. So you can trade intra sort of level ranges, of course, but I don't think we're going to be seeing major break up or major breakdown till we have a little bit of a better idea about what's happening on a broader sort of geopolitical sort of sense. So yeah, sort of wait to sort of see a breakthrough here. As I said, sort of got the alert set up here because this is where you want to really get it above to sort of trigger this kind of outcome in that. And I would say if you can get up above this, like, obviously closes above here, you don't want those wicks because as I was saying sort of on the downside here, this would have been an ugly sort of fat bearish candle at one stage and then whack, shot straight back up. So this is why you want to wait for those candles to close. So we get the close up above this zone. So we close above, call it 37 just to be safe because it's on the round number, or 370, whatever. Get a close above that, and then you start to look for those sort of previous levels or the sort of next levels. So body fills of the daily candle, that's going to provide a little bit of a resistance point. As much as I'm not trading this triangle, I think this sort of major sort of rising support, which was support sort of respected for so long. The underside of that's going to be another level where we could be looking for a price target. But ultimately, this sort of 380 level, I think, is going to be crucial. I don't think it's going to go through there, but if it can recapture that, then you got something going on. But yeah, for now, I'm sort of waiting to see how they open the week. It was a strong close to the week. Technically, it's broken out of this little channel. We may see a little bit of a back test before we sort of move up higher. But I do think we've probably got a little bit more upside in. I'm leaning towards this scenario of a higher range between 370 and 380, opposed to the sort of 368, 356 kind of sort of range. And finally, just have a quick look at China, where I'm not expecting much, and so a little bit of a sell-off on that on the morning. So if you saw the weekend video that I did, it said, look, we've got this little, albeit sort of sort of a bit of a sideways churn at the moment. Technically, you're getting this lower high coming in here. Where do we have it marked out? Maybe that was just there on the daily that I had it marked. All these things seem to have chopped off a little bit. Anyway, so yes, we've got the sort of lower high here. The buying's not obviously sort of like this little push coming up here wasn't really reflected in any of the RSI, and we're starting to see it peter out a little bit here. Yes, it's still sort of just churning along here. I think on the shorter one, I've got those little ranges marked out. These are the levels that you want to sort of get down underneath. I mean, the lower you go with these things, obviously, the more trends you can pick out. But as a 1 hour, yeah, I mean, if you really want to trade these things, that's the 1 hour short trend. You can see it coming down here. You can flip it onto that. You can see it obviously appearing in the sort of 4 hour as well. So these are the kind of things, if you get down and break this short-term trend, then you're targeting this little horizontal support. As we can see, this was the one that we marked out as it was coming down last week. Was like, this is where we need to get under. Obviously it didn't, and if it can't go down, it goes up. So again, this is the little short-term range for it inside the major ranges. And like everything else, it's just, I think just awaiting further notice of what the market wants to do in terms of risk. And yeah, because there's just so much uncertainty at the moment. So short-term trends, short-term trades are key at the moment. Buy and holds, apart from sort of gold, but even gold at the moment is starting to sort of be a bit more of a sideways churn. They're the sort of key trades in and out. And when wait for these large zones to break. Once the large zones start to break, you'll see it across the board. I think you'll see it sort of sort of what I call a cross chart confluence. So you have the sort of the confluence of the couple of different factors happening on one chart. Well, if you see those sort of same major levels breaking on some, you'll see them on the others as well. Like it's not like, I mean, sometimes you get sort of a bit of a divergence with these things. There's other factors involved, of course, but generally when the major levels break, you're going to see everything break, whether it's up or down. So that's just what we're looking for. But for now, China still just churning along. I would say because we sort of like put in this lower high here and it does seem to be rolling a little bit, I'd expect to push back down here. Of course, I am trading sort of the yuan to the downside, as you can sort of see. And we're seeing this little sort of short-term triangle sort of play out here. These kind of things could technically be a bit of a consolidation to move higher. But given the whole sort of sideways churn, I expect we're up around the top end of this range. I'd expect a bit of a cooling off and a short-term push to the downside of this range just before it sort of shoots along sideways a little bit more. All right, that's about it from me.